Hi, this is Randy Finney with Right Side of the Chart, and today is Thursday, April 29th, 2021. It is 3:15 Eastern Time as I'm doing the video, so 45 minutes till the close. And I told you earlier I did a video on the broad markets coverage of the major indexes, and I said I'd follow up with a short trade idea and long trade idea video, and pretty much update on both those categories, some of the recently highlighted trade ideas. I do wanted a quick update on the markets, what's happened since then. If you did check out that video, I said we had the potential for a bearish engulfing candle stick today, and barring a big dump into the close in the last 45 minutes, is certainly possible, but right now it's not looking likely. This is today's candle. Earlier we were down below. You can see the body. That's why when trading the daily time frame, all that matters is how you close the day. So intraday we're down to that skinny part, right where the crosshairs are, and we had engulfed those previous 3 days. But what happened since is the buy programs kicked in, and that's what they call a stick save. If they can close it back anywhere around where we are, pretty much you'd have to close it at or below today's lows to give us a bearish engulfing, and then we'd still want to see some follow through tomorrow. But it doesn't look like we're going to get that, and so I'll go over the some of the long and short trade ideas here in just a second. The S&P 500, the ramp was even more than that. You can look at this. It's almost a perfect V today. They had the big sell-off, took the markets down about 1% in the morning. This is the open right here. Here's our gap. There's our gap from where we closed yesterday at that yellow line down here. Gapped up here. They faded it really hard at the open. Took it down over 1%, and look at that, turned around, perfect V. So any potential bearish developments today have been completely wiped out, negated, and the uptrend remains intact. And of course, we're still well above the levels we needed to get to break support as well. So looks like, again, unless something crazy happens today, no bearish engulfing candles. There's today's candle. Look at that, way up here. But we're still seeing, look at the price compression lately. This is pretty unusual. We're opening and closing virtually flat every day recently. Remember, as I said before, this is a big earnings week. After today, we'll have the last or most of the big companies out of the way. The big fangs, that is, after the close today. So we'll see where the market picks up tomorrow. All right, just wanted to point that out. And remember, the reason I start there on the indexes is it's going to affect the swing trade ideas. Long trades are more likely going to play out or continue to remain in their uptrends as long as the market remains in an uptrend, and short trade ideas are going to have a hard time. Not that they can't pan out, some have already, but it's going to be a whole lot easier when you're swimming with the tide, not against it, whether you're trading long or short. So just keep that in mind. All right, let's look at the trade ideas. Let's start with the longs, and we'll go to the shorts. These are a combination of, these are all trade ideas mentioned in the last few months. Going back here, did a long trade idea video back in, I don't think it was mid-April, a few weeks back, highlighting several stocks that support. I believe this was one of them in there. I have it in my list of long trade ideas, SB, and it's already gone up and hit that first target and taken it out. That was resistance there, that line. I had it, I don't know why the level wasn't there, $3. That's a bullish breakout. That's about a 50% run since then. Took out that previous high. It was a big level. You can see back here it was resistance. And that is, as long as that breakout holds, nothing but bullish. Now, like everything else out there, almost everything, you got divergence here, pretty big divergence. So what you want to watch for this one, if you're in it, is a break of this trend line would be your early warning sign, especially if you fall back below that $3 level, because that was a key breakout. That was key resistance, which has now been taken out. Unless that happens, you can't spin this as anything but bullish. But again, with those divergence and all that, I'd be suspect whether or not we're going to be able to make it up to the next hard target here or resistance level at about 393 or not. And again, it will most likely depend on what happens with the market. Some of the other ones highlighted, again, in no particular order. These are just how they're in the watch list, maybe added. That video that I was referring to was back on right here, the March 4th, actually, when I started, the group that I'm going in now, a mixed bag of the more recently highlighted long trades in this one. This was another pullback to support trade idea Home Depot pulled back to the 247 support. Hasn't looked back. I updated it once or twice since then. Had a heck of a run for, especially for a mega cap stock, 33% gain off that level. And more recently, I said if it, watch out. There's a potential. This is not a great trend line. There's not a lot of reactions. It kind of captures a trend, but as you can see, it doesn't fit. More important there is this it's almost 319 level. I have it at 318.96. I mentioned that as support, so if you were long Home Depot, you want to stop somewhere not far below that, because a break of that will probably take us back. So far, we pulled back. We've tested it every day since. I think I mentioned it last week, if I'm not mistaken, at that level. And every single day, 1, 2, 3, 4, 5, we test it. Today, we're moving off it. Now, that could also take the form of a bull flag. If we're going to have a big rally in the market, if we're going to burn through these divergences, that would be your flag pull. There's your bull flag, and this would be the breakout. So again, it's another trade idea if you want to take it long, or if you're still in it, just again, all you have to do is keep stops. It's a strategic stop would be right below that, because if that is a bull flag, then it should we should keep going up. We have no business going down. So that's Home Depot, just an update there. Walmart was also on the same day back then on the 4th, mentioned as a objective long entry off this support right here, 128. And so far, it's moving up, and it's up about 10-11%, and nothing big, but better than the broad market over that period of time. And that's what do we have here? That's what I want to do, an update. Right there is gap resistance, the top of the gap, right around there. I'm referring to this gap right here. And then some price resistance right there at the bottom of the gap. So you zoom in, traders love these gaps. They're tradable levels, and so this is boom, 1, 2, 3, 4. Pretty much every day since what is that? That is the 7th. Nope, 6th. We hit that gap in April 6th. We've been trading around all month. So the way this works is if you pop the gap, get into it solidly. This was a marginal entry and then it failed. Solid move into that gap should give you a gap backfill. Otherwise, you get rejected and the stock could fall. So we'll see. I think we'll have a better idea. Well, almost certainly we'll have a better idea by early next week. Because most of the big companies I'm watching will have reported by then. All right, next up, let's rifle through these. J&J was another at support trade idea on that March 4th video right there on the 147.28 level. Nothing big so far, but still in an uptrend. So very minimum you want to raise stops to break even, or set them under these recent lows right there if you're holding this one for the long run. XLE and all the other energy ETFs more recently were mentioned right here the other day, about a week ago, at support, and so far nothing but green sticks from there in XLE, looking good at this point in time. ETCG was mentioned right here. We had a breakout above that 22.44 resistance level. It was a big level, big reaction high back here, reaction high there, reaction high there, and then we broke out and we backtested, and there were several opportunities. We continue to diverge, so maybe the breakout holds, maybe it doesn't. Those divergences play out, it won't. I should add that uptrend line, which I just did, but let me put it there permanently. There's your uptrend line to watch. So you've had 1, 2, 3, 4 successful backtests of that 22.44 level since it broke out right here, the day after it broke out, or the days following the breakout. And off that level, it is up 42%. Yeah, I think Amazon might have been mentioned too. It's in that long list, but not sure if I covered it on the 4th or not, March 4th. This one just the other day, again with the energy sector, I said you get more bang for your buck trading XCS and XOP. XCS up again today, another day up, about a 15% gain so far since that objective long entry last week. XOP, same story, objective long entry on support. Was up earlier, it's down a little today, but still up about a 17% gain so far. And there's not a lot in the chart saying it's not going to continue. I can't make a strong case to get out. Again, just trail stops up, or if you got your quick whatever you wanted, 10, 15, 17% out of it, take the money and run. nothing wrong with that. And those are kind of what I call hit and run trades, buying pullbacks to support, trade the bounce, or position long for the next trend up if that's what you think is coming. I just can't make a strong case for a lot more upside in this one, other than the fact that the overall market trend is still bullish. GSHHY, still nothing, needs to break out above 1055. VLDR, taking a little breather today. That one was covered here on a breakout above this trend line right there, and went up about 17%. And here we can add now a fairly clean uptrend line right there to watch. Ideally, again, you want to see the stock remain above there. But sometimes these, when you start seeing the early makings of an uptrend like this, this one has quite a few reactions, but it hasn't been, it's not that long in time. Sometimes you get little breaks through and you can continue up, and then later on you form a lower trend line. So again, it's strategic and objective to put a relatively tight stop below there, maybe on a daily close, maybe a big intraday break, or any, if you do any break, these little intraday whips are going to get you. So a little bit below there. Or if you're swinging for the fences on this one, you give it a wider stop. We had a support level there about 1228, and that could be a much wider stop. And then at the minimum, those recent lows about $11. You had two major reaction lows right there, and that would be really the, again, depends where you bought it. If you bought on the breakout, you're going to go underwater if you give it a stop there. But again, these trade ideas can be, updates on existing trades, or maybe you're just catching up on things here. And if you get down there, even a marginal new low, if we reverse after that, that would be, we'd have a big divergent low. If so, I'm drawing out how the indicators would look if this one suddenly went down and took out 11 by a relatively small margin. If that happens, what I like to do is, because a break of support in itself is bearish. So let's say it did go out and broke $11. That's going to be bearish because it's a break of support, right? I mean, that's simple stuff. Let's not overthink it. However, if it regains it, then that's called a bear trap or a whipsaw signal false breakdown, and those are very bullish because everyone that shorts the breakdown scrambles, and those shorts start getting squeezed, and you can see some powerful reversals. So if that was the case, again, a marginal new low that keeps these divergences intact right here, then you'd want to buy back in on a recovery, a solid break back above $11 on that one. Again, that's just an if. Otherwise, this thing's in an uptrend. It broke out, so it still looks like it's headed up to my 1729 target right there. And if that gets hit and anybody's in this, just drop me a note on the comment section under one of these videos, and I'll give you any additional targets if I think this one has. Here, I'll throw one out there now. I'm looking at the chart, and level jumps out to me about 2068. All right, let's move on, cover some more. Plug broke out. Plug was mentioned here. Either long its support at 25.28 and or on the break of the downtrend line, which it did. It broke the downtrend line. But as I mentioned, most important, you have both the downtrend line and this 30.09 BOD, or benefit of the doubt level, because that's resistance that came in just above the trend line. And so it's been sandwiching between support, which is support is back testing the trend line. It was resistance. Resistance once broken becomes support. And so now we need to pop 30.09, and if we do, it should take us up to my first target there, about 37.50. You want to sell a little bit below that if that's what you're targeting. And second target, if that's taken out, would be about 48.60 or so there. Let's look at Alibaba, BABA. Recently mentioned as a long off the trend line right here, and it's kind of not going far at this point, but again, just an idea, and as long as it's above trend, keep your stop somewhat below it. UNG, I've done quite a few updates, but yesterday I said, look, it wouldn't be a bad idea to take profits because we were right just shy of that target on the 60-minute chart right there, that $3 target. So I said close enough, and we pulled back a little today, and as I think I said yesterday, if we come back to the trend line, it's done us right over the last few times. I've highlighted both these pullbacks, and both of those were good for some nice trades. And if we get it again, you're going to have the trend line and then 2832 support just below. So if you're longer term trend or swing trader and you're looking for more, stops below there would be objective. Otherwise, if you're just a hit and run in and out trader, wash, rinse, repeat, buy pullbacks to the trend line. It works until it doesn't work. So that's what you do. When it stops working, that's when you stop buying. DM Desktop Metal, I'm sorry, that's a 3D printing company, was first mentioned on the pullback to this support, 1254, and then I said if it drops down to 1079, all the better, because that's better support. So objective long entry there or there, and then it went on to take out this trend line. I'm not crazy about that trend line because we only had two distinct reactions, really didn't have much of one here. Either way, it's moving up, it's in an uptrend, getting close to that 1566. It's pretty good resistance. I'd put good odds on a reaction there. Reaction can be either a pullback and or a consolidation under that level, but if and when it breaks there, then the next target would be 2140-ish right there. Alright, a couple more and we'll move on to some short trade ideas and wrap the video up. I mentioned Crackberry, that's what they used to call this one when everyone ran around, and it was the first to market smartphone before Apple ate their lunch. And needs to take out that 960-ish level. You can see right there it has yet to do so, and you can see it again on the daily chart. Pretty good resistance, and a pop above there could take it up to 1222. It'd be a nice hop, but no buy signal yet. Still a trade setup, not an actionable trade. PGJ is one of the many China ETFs, and I mentioned that one, I believe, on a pullback here to support right there at 60.46 and or a break of this trend line. We had both, and so far my first target was hit. It was hit a few days ago right here, and we've traded on there. This is a reaction. You see we hit my rallied up from 60.46, got about a quick 9.5% gain, and this is how resistance works. Hit, close on it, hit, close right on it, hit, finally rejected on the third day, and it's moving lower. So again, that's where, you know, an active swing trader would have booked profits there and either gamed a reaction, quick pullback, get back in, or wait for a breakout above that level to get back in. Whereas an active swing trader, you know, at this point just raise stops, you know, at least a break even, if not higher, and see if you can get that breakout there and run up to the next target. All right, let's see. I think that's about it. I mentioned RKDA the other day, one of the ag input stocks that I've been highlighting for months that lagged behind. It's a big support, 238. Taking a breather today, but so far it's moved off that support, and the first resistance level or potential target's about 344. And now let's look at some, let me see if I want to cover any more longs before we move on to the shorts. Yeah, I do want to do an update on gold. It's not a big day for gold, but you know, gold, as I mentioned, recently broke below this trend line, ran down. I said it'd be an objective long. You know, if it broke that trend line, probably take us down to 1759.75, which it did once. Back tested, rejection, that's resistance. Tested it again, so far held. So you had another opportunity to buy gold today on that pullback to 1750 or 1760-ish, we'll call it. And then of course, so what's going on with the dollar and the euro, you know, plays into gold, and the dollar continues down again. You know, just to keep politics, you know, limited to what the impact on the market's going to be. My friggin' goodness, the amount of spending the White House is trying to push through with these all these stimulus packages and welfare plans and all this. I mean, that's only can be net bearish for the dollar long term, and so that's why I remain bullish on gold. Near term, we watch this level. Gold, the dollar, this is DX, US dollar futures, remains below. This is the same downtrend line I gave you a few days ago. It's our 60-minute chart. We're in a 60-minute downtrend. There are potential divergences. That's why, you know, we're on lookout. If you break out, we could run up to either of these resistance levels, but we could just as likely continue down. This is pretty big support down here, and if we still have, which we probably will, if we get down here to that's 89,922, 89,659. If we get down to that support zone and still have these divergences, which if we get there pretty soon, we probably will. It depends if and how we get there. If we come on down, we will. Then you might want to look to position long for the dollar bounce. And if the dollar does bounce, that could put some pressure on gold. But as of now, the trend in the dollar remains down or bearish near term, which is typically bullish for gold. So That's that. And then the euro, same thing, dollar in reverse. I tweaked this trend line yesterday. There it is. We continue to diverge, but as I always say, divergences are not a sell signal. And that's what we're at. We're in an uptrend right now in the euro, which should be bullish for gold and, of course, the gold mining stocks. If I'm just so you know, if you haven't heard me say this before, unless stated otherwise, if I'm bullish on gold, I'm bullish on the miners. And the miners are typically a leveraged play on gold. If gold goes up X, let's say 10%, the miners go up X times some factor. It's not a set function. It's not X times 2 hard, but it's roughly that. You're going to see, gold rallies 10%, you probably get a 20% or more rally in the miners, and it cuts both ways when gold drops. So again, so I won't always cover the charts at GDX. I cover gold, and the silver tends to follow gold unless there's a big disconnect. And at times, I'll point those out. If the gold-silver ratio has gotten out of whack, one's gotten ahead or behind the other, and they're poised to play a game of catch-up, I'll highlight those opportunities as well. But again, for the most part, gold and silver will trade mostly lockstep. Okay, 20 minutes into it, and I'll run through the short trades real quick. Just remember, swimming against the tide, although there's been money to be made. Mara, M-A-R-A, or Mara, Marathon Digital Holdings. This is a crypto proxy, so it tends to go up and down with Bitcoin in particular. And this is the chart breakdown there. Rallied into that 50.89 resistance and failed, and I had this big yellow level here. It's important. We hit that the other day. That's 28.93 is where the line is, so give or take. There was a reaction low below it about 24.37. So if we break that, we head to my next targets, and I think we're going to get there. I recently gave you a sell signal on Bitcoin and the Bitcoin proxies, and I think it's a pretty powerful sell signal, and I think that's going to take us down. So I believe there's more downside in Mara. But if you're looking for the objective places to short, if you are looking to short, if you're long, same thing, just take these levels as areas you might want to consider getting out with a stop loss order. That would be a break. The first one coming a break of that 28.93 and then 24.37. That should open the door to 16.15 and then 10.37 and the primary uptrend line right there. Alrighty, Peloton. Peloton's just sitting on the edge right now. The edge is 98.68, meaning it's support. Very good support. Why is that? Well, you had a reaction there, several more there, and then you broke out and you back tested it. Yeah, successfully rallied off the back test. Back test again, rallied. But so far recently, it doesn't have the vigor or the juice, that it did before. When it back tested there, it was a big run up. Here, the buyers are coming in, but they're not coming in very aggressively, and this is limping and holding on here. I use the analogy like an exhausted sailor overboard clinging to a life raft. If he can continue to hold on, great. But if he goes underwater, this thing's going to sink down here to 72, and that'd be a nice short trade. And you can see there's I don't know if you can make it out in the video. It depends on the brightness of your screen. There's a confluence of key moving averages just above prices now. They've fallen below the 50-day exponential, 200-day exponential, and the 200-day simple moving average are all just above. So this stock is in a precarious technical posture. It's below a lot of key moving averages, which have turned down, started to roll over. They're really more flattened out. But more importantly, you have price support here. That's the most important level on the chart right now, in my opinion, about that 98.68-ish support level. Alrighty, then let's see. Next up would be Tesla. This market is about as resilient as I've seen in years. And as I continue to say, it's hard to imagine Tesla hitting, my next target down here, 460, 466, without the broad market going down as well. It is possible. Again, not very likely because of the heavy weighting, but from a technical perspective, putting the market aside for a second, Tesla is flirting with that primary uptrend line that's off the March lows right there. And however, you have this BOD or benefit of the doubt support level around 661.78. In fact, I think that was the first target after the sell signal back here, and we hit it there, bounced, and we've been flirting on it. Next up, WGO, Winnebago. I mentioned this one. Well, the big level to me, the most important level is 7360. It's support, and a break below that will trigger a sell signal. And my first target zone is all the way down here, about 6088 to 5872. I also mentioned the potential. It's not the most symmetrical pattern, and nor am I seeing the volume patterns that I want to on the formation of the right shoulder here. But you have a potential left shoulder, head, right shoulder, and now a second right shoulder. That's perfectly normal. Some head and shoulder patterns only have one left shoulder, one right. Some have two left shoulders, two right shoulders, and sometimes you get two shoulders on one side or the other. And then some have a flat neckline, some have an upward sloping, and some head and shoulders have a downward sloping. What you'd want to see ideally, because I think a lot of people, these are easily recognized patterns. I think they're thrown around too much. And, if I see what looks like it, I'm going to throw it out there. But ideally, you want to see increased volume on the formation of both the head, which you did. There was an increase in volume, but also on the formation of the right shoulder. Not so much on the left shoulder, just the head and the right shoulder. So we'll be watching for that. And then again, it doesn't matter because you have the necklines right there, just above the 7360. So all that really matters is, if you get that, you still have to break 7360, which would also be a break of the neckline and again take you down. That was the measured target of the pattern, but that's where I had already a resistance or support zone there. And there's my notes from last time, not confirmed by volume yet. But again, nice, one of my better looking short setups. Not an actionable trade, only a setup. Movado, diverging, probably a minor trend line. Let me just move on, talk on the next one. Signet Jewelers, same thing. This one ran into resistance recently, tried to break out. When I go back in time right here, 68.39, you can see this was big resistance back then, and so here's one that's rallied into resistance while overbought with negative divergence, and the big sell signal, if and when we get it, or probably when, will be a break of this primary uptrend line. It's pretty well defined. That would also take out that 50.21 level and then any of these targets down here. Let's see, I covered the biotechs recently. They have I'm not crazy. I'm going to probably remove these head and shoulders potential, because I had a potential head and shoulders. I'm going to take that away right now. It is at resistance, 139.60 right now, and support is 122.43. So simple stuff. Solid break above there, near-term bullish. Solid break below 122.43 is bearish. Should take us down to at least 108 right there, and potentially down to 97.90. We'll call that $98 again, if the support's broken. Now, being that it's rallied into resistance, you could short it with a stop not too far for a swing back down to that 122.43, and that would be a healthy short. It would be about a 12.4% drop. If you can't short because you're in an IRA or a non-margin account, be careful with it if you don't know what you're doing, but you can go with LABD, which is the 3-time bearish ETF that tracks this exact same sector as this biotech ETF. There's other biotech ETFs out there like IBB and PBE, but XBI tracks the SPDR's S&P biotech sector, as does LABU and LABD, the 3-time leveraged long and short ones. All right, next up, we're almost done here. BC, I gave you BC as a setup recently, Brunswick Corp. Nice uptrend line right there, especially recently, a lot of reactions on it as it continues to wedge higher and with negative divergence, so sell signal pending the trend line. And, I can give you some additional targets, but I think if we get it and we get a nice pullback in the market, there's a potential for this one to come all the way back into about 69.71. That would be about a 36% drop from where we're at today. But again, depends if and when we get the sell signal where we're at the time. Semis continue to hold above this BOD or secondary uptrend line right here with a breakdown below it, likely to bring them back to 366. But again, above trend right now. Let's see, do I have any more for you? Yes, I do. DXLG, not one of my favorites. There's a bearish rising wedge. You can just mimic that pattern on your charts. Break of the wedge could bring us all the way back to this low price. You be very careful shorting low price stocks. It's above $1, so technically it's not a penny stock anymore. It's at $1.50. But when you play around with these low price stocks, they're going to swing big. You need to know that and reduce your position size accordingly. Ally Financial, it broke trend, but the financials are having a good day today. So what it's been doing is back testing. The problem with shorting a backtest, you can backtest for a while. You can backtest and then finally get back above the trend line. So what you want to see is a rejection off here, and keep an eye on the financials. I'll probably cover them in a separate video. We'll need to see some decent sell signals there to make a case to short Ally. But if so, it should come back into about 42.70 or so. And then last but not least, Tupperware. I mentioned Tupperware is an objective short right here a couple weeks ago on that bounce back to 29.16. You know, you had this trading range here, then you broke below that trading range, you had a quick drop, and you've been bouncing in this range, which is from $23 up to about 29.16. Right now we're in no man's land, so this is really more of an update on that. You already had a chance, and I believe I said when you short it there, your first target would be a move back down to 23. So you already had one short trade opportunity, and it was good for about 20% drop, and that's it. Wash, rinse, repeat. Be long here or covering shorts. If you're just trading the channel and you want to be short here. In fact, the line, I'm going to sharpen my pencil on it now that I zoom in. You can put that line right there at about 28.50, we'll call it. That's more accurate when I zoom in nice and tight. So again, I call no man's land when a stock is smack between support and resistance. It's like in tennis. You don't play the middle of the court. You're either going to play the net or you're going to play back on the court. And you're in the middle of the court. That's no man's land. Same with stocks. So there's no trade to be made now other than the last objective long entry off the bottom, and you hold out to get ready to sell when you get near the top of that range, and or reverse to a short. Okay, let's wrap it up here. That's an update on, I believe, everything that I highlighted in here were trade ideas I've highlighted recently. If and as I come across new ones, I'll be sure to get them out to you guys. But again, long and short trades are going to be tough as long as the market kind of grinds around. The S&P is in an uptrend, but as I covered the other day, the NASDAQ 100 and a lot of those tech stocks, including semis, have kind of grinded around, and they recently made new highs, but hardly over that last peak back in February. All right, so that's where we're at. So there are definitely opportunities to make money in trading lately, but they've been in commodities and gold and in swing trading, in and out. You can get in these grinding markets, and you just have to move around, find the sectors and the stocks that are most bullish and bearish, trade them, hit and run, instead of really long-term positioning, unless it's a niche stock and the chart looks really good. All right, I will stop talking. I'm going to get the video out to you guys. This has been Randy Finney with Right Side of the Chart. Have a great day.